Welcome back. We have a special episode today for you guys. First of all, thank you for everyone that's put in the comments. We're trying to accumulate data on what it is that you guys want and what level you are in your journey in cryptocurrency. So welcome to this episode. We've created a strategy for you guys. It's Dynamic DCA, accumulate to distribute strategy, created by Crypto Bullseye for our community. So let's get into it, guys. Okay then guys, I'm just going to go briefly over the concept of the strategy, then I'm going to show you what the final setup's going to look like, and then we're going to wipe the charts and go through it one by one. There's 5 steps to it and I'm going to break it down into 5 different slides, and then we're going to apply it to the charts in 5 different steps. So the things that you're going to need within this are either Google Sheets, Microsoft Excel or something similar. It doesn't have to be either of those as long as you can create a spreadsheet from whatever software it is that you're doing, and your charting platform. So people get a bit scared sometimes if they're a beginner to a charting platform. We use TradingView, sometimes we'll use NinjaTrader, but predominantly it's TradingView. And if you haven't got a TradingView account, there is a free version where you get limited access. That'll be suitable for this strategy. So if you haven't, you can either sign up or you can just use it on the front end of the website. So if you didn't want to sign up and put in your details, you could just use it on the front end of the website on TradingView, and we're going to show you step by step how you can do that. So the concept, we're going to be accumulating and distributing at predetermined levels of support and resistance, and we are going to be, this is going to be a low touch strategy. It's a beginner strategy. We've tried to keep it as simple as possible to try and protect you guys, and you may think that certain things might work differently for you. Each person's different, so feel free to tailor it to your own requirements. So this works well on high cap crypto and stocks. So when I say high cap crypto, I'm talking about things that have had a long life and have got a good development plan and are going to last a bear market. So a lot of the small altcoins, this is not going to work that well on them, because ultimately they can lose 90% of their total value during that bear market or crypto winter. So we're trying to keep it as simple as possible, and we've included a suggested rule set for you guys as well. So it's a step-by-step process including a rule set, and this is what the final chart is going to look like. So this is what the final chart's going to look like. We're going to do it together. Like I say, there's 5 steps to this process. We're going to go through them one by one, and we're going to set your chart up to look like this. So you'll notice a couple of things on here. If you're a beginner, we'll walk through it with you, but there's a 200-day moving average on here. We're on the daily chart, and we've got a Fibonacci level set, which probably looks a little bit different to yours. We're going to go through how you can set your Fibonacci up like this. There's a method in the madness, and it's important that we do this because it forms part of the strategy rule set. And then you'll also see areas of support signaled by the bluey green lines, and you'll also see resistance signaled by the red lines at the top. So we're going to be accumulating our areas of support and distributing our areas of resistance. We're going to go through it step by step. There's more to it than that, but I just wanted to show you what the final setup looked like. Let's erase the charts and get into it, guys. Right, okay, step 1, which is the chart setup. As I mentioned before, we're using TradingView in this example. You could use whatever charting platform it is that you like. We're going to go over TradingView. We're going to show you how you can access the charts from the front end of the website if you did not want to sign up. But I just want to go over briefly what these key points are within this strategy and what we'll be applying to our charts. So you're going to have the 200 MA, which stands for the moving average, and because we're on the daily chart, what this is going to do is it's going to accumulate the data over 200 candles, 200 daily candles, and it's going to provide an average price point for those candles at a period in time. And you'll see that that's represented by a moving average line, which we'll go to later. So there's also the stochastic RSI. Now the stochastic RSI is a momentum oscillating indicator, and it will tell you when the market is in areas of an oversold territory or an overbought territory, which is important to this strategy too. So the time frame, we've already said that it's going to be on the daily time frame, and we're also going to be applying the Fibonacci tool a little bit differently to what you'd usually use the tool for, but it's important for this strategy, and I'll show you how to set up your Fibonacci tool just like as for this example. So let's get into the charts. Right, first thing we're going to do, go over to TradingView or your preferred platform. This is what TradingView looks like from the front end, and you'll see that you've got snapshots of the market, market news, market summary, you've got products here, you've got communities, different markets, different types of brokers, all sorts of stuff to play around with, but what we're interested in is the charts. So we click on the charts, and then the first thing that you want to do is find out what it is that you're going to be looking to invest in. So we were using Bitcoin in our example here, and what I want to say in addition to this is don't have all your eggs in one basket. So you're going to have an allocated amount for this, and we're going to show you a good way how you can split this. It's not financial advice, it's something that we're looking to do, and it certainly works a lot better than what it would be if you were just dollar cost averaging every Monday or every payday once a month or whatever, because there's rules in place where we can't accumulate at certain levels. We can only distribute at those levels. So it's works out a lot better, and it helps when you're using percentages that you can accumulate over a period of time as well, rather than using monetary amounts which you could potentially burn out or run out of at a later date. So we're using percentages, that's another key point. And what I want to firstly do is show you how you can apply your Fibonacci tool, and we're doing it a little bit differently in this example. And what I want to do is show you guys how to set this up. So if we just set this as a default, your Fibonacci tool will look a little bit something like this. So what we're going to do is we're going to click on it, hit the settings button, which was the cog button, settings button, and then we're going to get rid of everything other than the 0, the 1 and the 0.5. So we're not actually using Fibonacci levels, and then we can just mark them. We can keep them like that if you like. Right, so you've got your Fibonacci levels on, and what we're doing is swing high to swing low. It's going to be more upside down in this instance actually, because the accumulation is going to be green. Right, swing high to swing low. So top 50% and bottom 50%. Now this is important, and we're also going to add the moving average, and I'm going to tell you why both of these levels are important in this strategy. So just bear with us, and we'll add the moving average now. So you click on indicators at the top here, indicators and moving average. Click on the moving average, and what we need to do is go into the settings, the top left hand side, MA, settings, the cog again, inputs, and we're changing that to 200. So remember, the 200 moving average represents 200 candles on this chart. We're on the daily chart, so it's 200 daily candles, and this line here represents what the average is at any point in time of the previous 200 candles. So you can see that it's called a moving average because it's constantly moving, and this is an important level for us. We'll go through it into a little more detail why a little bit later on in the episode. So we've applied the Fibonacci tool, we've amended the settings, we've applied the moving average, and next what we need to do is apply our levels of support and resistance. So the way that we do that is you go up here and you've got different variations of candles. You've got your Heikin Ashi candle and your standard candles. If you just click the bar next to it and go on a line, it it takes out the volatility and the noise of the candle wicks or the extreme highs and the extreme lows of the day. So what we're looking to do is add sticking points onto the candles, so sticking points of support and resistance to the candles, and we'll do that now. So you can see that this is an area which is held strong. 1, 2 touches, 3 touches, it's fallen through, acted as resistance, and we're testing it again, potentially as support. So that's a huge area there, and that's going to be signaled by a green line, and you'll see why very shortly. So that's going to be a buy area. You've got 1, 2, 3 touches there, and that also represents the 2017 all-time high, which is going to act as a strong area of support. So you've got 1, 2 areas of accumulation built in now, and if you can see any other areas, you've got 1, 2, 3, 4, 5 times that's hit. So that's going to be a strong area of support going forward, and then we can build in. Looks a pretty strong area. 1, 2 touches, 3 touches, a strong area there. So that's how you build in your support and resistance. There's not too much round here that I would look to build in. We'll do the same for the resistance levels. So you've got your all-time high, which is always a good level, and I'm just going to change this to red. So 1, 2, 3, 4 touches. 1, 2, 3, 4 touches, it's fallen back through, and it's likely to act as resistance at a later date. Get some levels here, 1, 2. See how price reacts at these levels. These are the areas that we're looking for. Right, okay. I think that's done now for this chart. Right, okay, so we'll have a look at step 2 now. So just quickly before we go into step 2, one thing I did forget to mention was how to apply the stochastic RSI. So similar to the 200 moving average, it's in indicators, and what you'll find is if you're on a free version of TradingView or other platforms, you may only get one indicator. So you've got the 200 moving average or the stochastic RSI. So how I suggest you resolve this is interchange between the two of them. Put the 200 moving average, mark a line on the chart where the 200 moving average is with one of your painting tools or drawing tools, and I'll show you very shortly how to use those, and then add the stochastic RSI at a later date, and then just keep interchanging between the two of them. So you've got the indicators up, and you just go to stochastic RSI, click on stochastic RSI, and you'll see down here what it is it's a momentum oscillating indicator, and it tells you when the market is in levels of overbought or oversold territory. So just as an example, you can see that we were trading in this upward channel on Bitcoin. We're trading in this upward channel on Bitcoin, and if you look at where the areas of the stochastic represent the price action, you'll see that overbought, due a pullback, oversold, due a pump, and it's not an exact science, this is a lagging indicator, and you can use it in confluence with price action and gain a better probability of which way the market's likely to move next. So don't forget, this is an investment strategy, and we're going to go over step 2 now. Right, okay, step 2 now, which is the setup spreadsheet process. What you need is Excel, Google Sheets, or something similar in which you can record the data and know exactly where you are at any point during your investment period. So it's an important process. And as I say, we're going to be using Google Sheets for this. And let's get into Google Sheets right now. Right, okay, so we're on Google Sheets and I've pre-filled some information just to make it easier, but what I'm going to do is walk through this information with you guys. So these are the columns that you're going to need for this. You're going to need a column for the token name, column name for the ticker, current price, all-time high, percentage from all-time high, which is important, price that you've bought 1, price bought 2, 3, 4, and you can go to 5, 6 depending on how many times that an opportunity arises for you to accumulate. And the same goes for the selling. You're going to find out what your average price is sold, your total amount sold, and we're going to be doing this in percentages, remember. So first and foremost, one thing that I do like about Google Sheets is you can find out what the current price is in real time. So this is uploading in real time, and the way that I do this is input a formula, which I'll leave in the link in the description below so you can copy it, equals import data, and then you put in an API link to cryptoprices.cc, and then you put in the ticker name in this instance, which is BTC. So that's it pulls the data from real time via an API link. So the same for the all-time high as well, and the formula is exactly the same, apart from it's got a /ATH for all-time high, and again I'll leave a link in the description below. So this one, very important, because you'll see in our rule set very shortly that you need to be a minimum of 50% from the all-time high before you can accumulate at any level, and above 50% or below 50% if you're going to be distributing. So that's an important thing, and this is just a simple formula where you just put in equals, open brackets, and then in this instance it's F6 minus G6, but it's going to be your current price minus your all-time high, close brackets, and then it's going to be divided by the all-time high. So if you just put that formula in there, which is in this instance equals, open brackets, F6 minus G6 divided by G6, and it's basically equals, open brackets, current price divided by all-time high, close brackets, divided by all-time high again, and then enter, and then you'll get the all-time high from that. So your price bought 1 level, your price bought 2, 3, 4, and however many levels it is that you need. You don't need to fill in any information from that just yet. You need a column for average price bought and total amount bought. So what you need to do on average price bought on Google Sheets is you just need to input equals, and then average, and then what you need to do is drag all of your buy levels do it again. So equals average, open brackets, all of your buy levels, and then enter, and that's going to get your average price bought. So let's try that, see if it's worked. Just put 1, 2, yeah, that's working. So you got 3 and 4. So if you bought as examples 1, 2, 3, and 4, your average is 2.5. So that's working nicely. And then your total amount bought, which is going to be, formula for that is going to be equals, open brackets, and then what you're going to do is you're going to click each of these buy areas. So let's do it. Equals, open brackets, and then we're going to go price bought 1, add, price bought 2, add, price bought 3, add, price bought 4, and you can just keep doing that for as many as you need, and then you're going to close the brackets and then press enter, and that's going to tell you the total amount bought. So you can see as we put 1 and 2 in, you've bought 3. So that's working nicely, and then you replicate that for price sold, total amount sold. replicate the process completely. So that's how you set up your spreadsheet, and if there's anything else that you need from that, just leave a message in the comments and I'll come back to you and explain it in a little bit more detail. So we'll have a look at step 3 next. Right, okay, step 3, where we're going to build in percentages at dynamic levels of support and resistance. But before we do that, I just want to explain why it's important to use percentages, and it's basically to protect our capital. If you're going to be using specific monetary amounts each time, and we're in a long downtrend, for example, over a long period of time, you could eat your capital up at a lot quicker rate than what you would with percentages. Ultimately, if you've got 10% of $200, you've got $20. If you've got 10% of $190, you've got $19. So it's important that we don't use up all our capital during this strategy, and that's the reason why we're going to be using percentages. Before we actually get into applying those percentages, I just want to thank all our new subscribers. It's very much appreciated. All your comments are all read, and we try and reply to each and every single one of you, and we try and tailor the content around you. We want to thank our existing supporters and subscribers and community members, and anyone that's watching this for the first time and you do like the content or know anyone that might find this useful, share it with your friends, give us a thumbs up, subscribe to the channel, hit the notification bell. We do emergency crypto market updates and we try and tailor the content around you guys. So we want to learn together, we want the community to build and grow together, and let us know exactly what stage of your crypto community, of the crypto journey that you guys are in, and we'll try and help you along the way. So let's get into step 3 now, which is applying those percentages. Right, okay, so this is what all your charts should look like now. I've just added in distribution and accumulation. So basically we're going to be distributing at areas at the top in the red and accumulating at areas at the bottom in the green. We're going to add our percentages in here, but I just want to show 2 important points on this chart, and one's that we're not allowed to be offloading below the 200 moving average, and we're not allowed to be accumulating above it. So that's one of the rules. We're going to go into the rule sets a little bit more shortly, but you'll see the 50% line within this Fibonacci retracement from the swing low to the swing high is also another area that's built into this strategy, and we're not allowed to accumulate at areas above it, and we're not allowed to distribute at areas below it. So we have to be below to start buying, and we have to be above to sell. So that's the concept of this. If you wanted to just add in distribution and accumulation to your charts, and what we'll do next is we'll add in the percentages. So I'm just going to do that now. You can see that I've got a toolbar down here. Yours might be on the left hand side, and the way that you can get a toolbar on the bottom is just click the star button within your toolbar, and it'll create a favorites bar, which is at the bottom here. So I've added text to my toolbar at the bottom, and what I'm going to do is just going to write the first level of support, which is 5%, and I'm going to replicate that with the first area of resistance, and then what we'll do is the next level is going to be 10%. So this is the amount of our capital. (10%), 10%. What you'll probably find is these areas aren't all going to get hit at once. So you may get, as an example, a 5% hit, a 10% hit, and then a complete retracement back down into the accumulation. Or similarly, you might get a 5% hit in the accumulation, then straight back up to 15% in the distribution. So it's not an exact science, and you've got to use the strategy to work to your own benefit. So each time that there's an opportunity, 50% below market price, below the 200 moving average, at support of accumulation, we can accumulate at these levels. We've got the big run, and then we're offloaded at these levels. So you've got the 15% level, the 10% level, and the 5% level. So if it comes up, hits the 5% level and retraces, you take your 5%, comes back and hits the 10% level, you take your 10% and retraces, and then it comes back up at the 15%. And what you're going to have to also remember is that things change over a period of time. So if the market makes a new all-time high, you need to readjust your levels, add in additional accumulation and distribution levels as and when they form, and you have to move with the market. So if we, as an example, if we created new levels coming up and then the market made a new high like that, we would need to move our Fibonacci line up and then add in our new support and resistance levels. So we're moving with the market and we're keeping up to date with the market at all times. But the benefit of this strategy is you don't have to very often look at the market, because each candle is represented by a day, and the market's certainly not moving on the asset that I'm demonstrating, which is Bitcoin at the moment. We're in a sideways range at the moment where there's a lot of indecision, and we don't really need to look at the market at the moment. You can put your bell alarms on TradingView, or you can set alarms on your trading chart platform at these levels, and you can just come back each and every time that you get a bell notification to let you know as and when you're going to hit these levels. But let's build in the last few percentages, and then we'll look at some examples of applying them to the spreadsheet. So that's going to be distribution 20%. The last distribution level that we have, 25. And we'll just do the same quickly for the accumulation. That one's 15. Next one's 20. And then 25. Okay, that's the percentages built in. Let's have a look at step 4 now, which is the rules. Okay, step 4, bullseye suggested rules. So we've tried to keep this as simple as possible, as we've mentioned before, but if you just take a snapshot of these rules or write them down, it just helps you create a basic structure. So it is a basic strategy that we're trying to keep for you guys, and a longer term one, so it doesn't mean you're at the charts all the time looking at it. But what we say is the suggested rule set is that you must have a minimum 4 years of chart data. So there's a couple of reasons for this. Is if you've got a new, for example, high risk new cryptocurrency altcoin, it's not going to have enough data to be able to work out where the fair distribution level is, the fair accumulation level, or where the mean average price action is. So we can't gather data on something that's new. We want to have something that's got a minimum of 4 years chart data. It doesn't have to be Bitcoin, it doesn't have to be cryptocurrency, it can be stocks, shares, currencies. So that's one thing that we do suggest, is you have a minimum 4 years of chart data. So we've talked before that the accumulation levels must be below the 200 moving average and below the 50% fib level. So you're not allowed to accumulate unless you are below the 200 moving average and 50% fib level. So distribution's the opposite, where you've got to be above the 200 moving average and also above the 50% level. So we're saying no flipping between time frames. You can't use the daily chart and then go into the hourly and see what's happening with support and resistance on the hourly. It's not going to work. This is a longer time frame investment, so we're sticking to the daily, or we suggest that. If you want to go to a higher time frame, such as the weekly, and you've got enough data to create all of these rules within that weekly moving average on a 4 year time frame, feel free to, but we're suggesting the daily in this example. And then obviously we spoke before about why you need to update your dynamic levels when and needed. So as example, if the market makes a new high, you need to update the Fibonacci, add in your new support, your new resistance levels. If any new major support levels are created, you need to update those as well. So you can just keep your chart updated. It's probably a case of go and have a look at it every couple of weeks, see what levels have been broken, if at all. If it's a sideways ranging market, you'd probably go back in a few months' time and not much would have happened. So you don't need to touch this strategy very much, and we suggest that you do have some rules in place. We've given you these ones. If you want to add your own, add your own. Like I say, each person or investor is different, and each thing suits a different person differently. So if you think it's a good idea to add any additional rules to this, feel free to. Right, okay, so next we're just going to go over the practical application. Right, we're up to step 5 now, which is the practical application. We're going to go over examples as to how you apply these to your spreadsheet, what areas you need to look at, and the percentages. So first and foremost, work out your initial investment, and this is a small part of your portfolio. You can't put all your eggs in one basket, so you're allocating 2 lots here of percentages. One's the percentage that you're going to allocate to this specific asset of your portfolio. So as an example, I'm using Bitcoin. If I was going to allocate 20% of my overall portfolio to Bitcoin, then I've got a 20% of my overall portfolio. So if I had a 10,000 portfolio and I was going to allocate 20%, I'd be allocating 2,000. So we'll use 2,000 as the example that we're going to allocate into this investment. And what you've got to remember is your 2,000 is staying into currency. We're going to be allocating at periods of accumulation only, and then getting rid of the asset in areas of distribution, and we're using percentages, remember. So we're going to know all laddered in investments, so we're going to ladder in over a period of time. We're not going to put everything in all at once, and we're going to note that on our spreadsheet, which is going to calculate our average. And we're also only using percentage allocations and not set amounts, and that's to protect our capital, as we've previously mentioned. So what we're going to do is we're going to go into the charts and look at a couple of examples. Hope you found this useful. Let's get into the charts now. Okay, so we've got the chart set up nicely now. We've got our stochastic RSI at the bottom. We've got our support and resistance lines built in for the dynamic accumulation and the dynamic distribution. We've got our percentages built in. We've got our 200 daily moving average applied, and we've got the Fibonacci set, so we know where our 50% level is. So we've got a better idea as to what we're doing now as far as the strategy is concerned. We've got rules in place, and we're at a point of accumulation zone 1, which is the 5% level. So if we had our $2,000 capital, then we could apply 5% of that at this zone, which would be $100, and we can look at signals as to what price action is likely to do next. In the stochastic, which it's saying it's very oversold at the moment, we've failed this level, we've hit it as resistance, managed to close above, but it's signaled by a 3-bar reversal. So you've got your green candle, your indecision candle, and your bearish candle. So it's looking like that's going to test as resistance again. We're oversold in the stochastic, and the chances are we're possibly going to come back down and test the 24,444 level, so 24,500 level nearly, as far as price action is telling us. So a bit of a slowdown in the stochastic and a more of a pullback here. If we close below the previous swing low, we are likely to test these recent levels. So you come back and you could look for another buy entry at the 10% level, and so you'd be putting $200 in at this level, and then you'd be putting, if you manage to get a low back to the 20,000 level, you'd be putting $300 if you were starting at these levels. So it's a percentage of the previous of the capital that you've currently got. So as an example, if you hit the 10% level initially and price action was at the 10% level, you're putting 10% of your portfolio, so that's $200. That means that you've got $1,800 of capital left. If you were to hit that 10% level again, the next one would be $180. So you remember, we're using percentages on this, and that's important. So what we'll do is we'll go through, and I'll get rid of the stochastic. We'll go through, and what we'll do is we'll put the bar replay on, and I'll show you how you can do it in real time. Right, I've put the bar replay on, and we've gone back in time to just before May 2021, so we're probably expecting a bit of a crash about now. Let's stick bar replay on and we'll see what would happen if we were doing this in real time. So you'll see the area that we're at now. If we were just allocating our portfolio, and we've got our $2,000, which we're using in our example, we're not allowed to do anything because we're at distribution and we haven't allocated any entries yet. So we have to wait for the rules to kick in, and the rules are saying that we've got to be below 50% of the highs, and we've also got to be below the 200-day moving average. So we're not allowed to do anything yet, and we'll just press play and see what price action is going to do. So firstly, we've come down, we're below 50%, we're below the 200-day moving average. We've had this big accumulation wick where the buyers have pushed price action back up. If you had a buy order set at this area, that would be a good 5% level, which is zone 1, 5% of inputting your position. So you'd be putting in $100 of your 2,000. Come back, and then we're waiting for another opportunity. There's your second one, another 5%. So it'd be 5% of 190, because we're using percentages and not actual monetary amounts. And then 3. So you've had 3 lots of accumulation if you've set your limit orders here. And let's see what's happening now. As far as price action is concerned, we're in no man's land. Because we're between the 50% level and the 200 moving average, we're not allowed to take anything just yet. We're not allowed to distribute, remember, until we're above the 200 moving average and above the 50% level. So we're above the 50% but not the 200. So let's see what happens. Now we can distribute. So you've broke the 200 moving average on the daily, you've come back, you've retested distribution zone 1, so we can distribute 5% of the capital that we've put into there in zone 1 and then see what happens with the rest. You've hit accumulation 2, 3, 4, so you're taking 15, 20, 25%. You're taking these levels out from your capital that you've invested so far, and then we've broke the 200. We're not allowed to take anything. We're not allowed to distribute anything at these levels. So let's see what happens next. Didn't hit support. Didn't hit support. Not above the 200, so we can't distribute. And then boom, we're at support. We can input some of the profits that we've taken from up here, the distribution profits, and put them back into the accumulation. So you're accumulating your pot again at these levels, and we're pretty much at where we are in real time now. So you've got your accumulation. You've got your accumulation at the 5% area. It's looking quite weak at the moment. If you add your stochastics on there, you can see that we're at an overbought level. So it's likely that price has got to try and make a new low. If we get a break and a close below this level, we're likely to come back and test the 24,000 region for Bitcoin. And then the previous zone of support at the 15% laddering in level is just pretty much below the all-time high at 19,340 of 2017. So that's how you do it in. That's how you apply it in real time, guys. Hope you found that this is useful. What we'll do is we'll have a quick look at the spreadsheet and then work out some examples as if we took some of these trades and what our portfolio would look like after a period of time. So let's have a quick look at Google Sheets again. Right, let's look at a couple of examples. Before we do, actually, I just want to briefly go into something as far as trading psychology is concerned, because with the distribution and the accumulation method, it's going to feel like it's the wrong way around when you feel like the time is right to buy or sell. You're going to get lots of positive news, you're going to get lots of retail talking about it, everybody in your nan's going to be talking about it. Everything's going to feel like it's going to go to the moon, and those are going to be levels that we're going to be distributing at. So the institutional investors, the high net worths, the crypto whales are all going to be buying at our accumulation levels. They're going to be trying to get as much for their money, as little as possible. So we're going to be following that suit. But as far as your mindset's concerned, you need to really flip it around a little bit, because you're going to be wanting to accumulate during periods of distribution and distribute during periods of accumulation, and that's the way that the market works, and it's designed to make you think like that. So try and flip your mindset and just stick to the plan If you've got a plan, build in your rules. If you've got your rules, use our rules if you want to use our rules, but just stick to your plan, because the market is like a roller coaster as far as the psychology is concerned, and it's designed to make you feel like you want to do the opposite to what you should do. So let's put in a couple of examples, and if we put in $200 of our investment into the pot, and then we put in at zone 1, which was 5%, and then we put in example 150 in the next one, and 140 in the next one, and 120 in the next one, you'd work out that your average capital amount would be, just stick in the formula, it'll be equals, open brackets, capital amount 1, add 2, add 3, add 4, and then you see that we've put 610 of our capital into that. Say we got Bitcoin at 30,000, 25,000, 22,000, and we managed to get it at 17,000, and we would have an average price from that of, if we just stick in our equals average, and then just highlight all of them, press enter, you've got an average bought price of Bitcoin of 23,500. So let's say that we hit distribution level 1, and we're taking out 5% of our capital. We've got 610 in there, so $30.50. Let's just carry on doing this, and say we were taking 50 out, or 60 because we've hit zone 2, and then 70 at zone 3. These are just examples, we're not going over the actual chart again. And then the asset price when we're letting go is 40,000, 50,000, 65,000, and 69,000. You see, you've got your average distribution price, which is 56,000, whereas your average accumulation price was 23,500. So you can see the power of where you're buying compared to where you're selling, and this laddering in effect is very good, because ultimately you don't know which way price action is going to go, and if it hits accumulation or a distribution point lower or higher, then you can benefit from that by not having your eggs all in one basket and not having a position which is 100% of your capital. So it's good to distribute, and that's the power of that. You've got a distribution price which is twice as much as what your accumulation price is, and you've got your profit taken 240.50, and that's not compared to 610, because don't forget we've still got the rest running, and it's a rinse and repeat process, rinse and repeat. You'd keep doing this and you'd keep doing this, and basically what ends up happening is you take out your initial investment, so you haven't got any risk as far as your own capital is concerned, and then you can look at a different project, you can go through the charts and see if it works on that project, and then you can reaccumulate. And that's the power of compounding. We're putting our investment in and we're taking our investment back out. It's going to feel uneasy at times when you're distributing, it's going to feel uneasy at times when you're accumulating. It's going to be lots of FUD and negative news. China will be banning this, China will be banning that when you're accumulating, and people will be thinking that Bitcoin's going to go to zero, but that's the time that you need to accumulate, in times of fear, and then distribute during times of greed. So I hope you liked this, I hope it made sense. If you did like it, like I say, share the comment, share it with your friends, hit the notification bell. We do crypto market emergency updates, so hit the notification bell, subscribe to the channel. Many thanks guys, have a great day, bye now.